2015 could also prove to be a watershed year for financial inclusion in India. The RBI granted in-principle approval for the introduction of 11 payment banks and 10 small finance banks. Alexander Mathew reports on the move that is being billed as a catalyst for change in the country's banking architecture, and on that scam that also took place during the year that shook its foundations.
Irish playwright George Bernard Shaw once said that progress is impossible without change. The Reserve Bank of India Governor Shaw took note of that this year with many changes that will potentially overhaul the Indian banking system. And foremost among those was the introduction of payments banks and small finance banks into the banking ecosystem.
These people and millions like them across India's rural landscape will benefit most from the Reserve Bank's move to induct a host of small, agile companies into the banking fold. The payment banks will use their technology to offer small investors an option to save through deposits, and the small finance banks will attempt to lend to the small borrowers. The RBI hopes that the new entrants will be able to complement the existing players and improve the overall banking system. But change is never easy. Existing players are worried that the new entrants, backed by wealthy promoters, could disrupt pricing. After all, the initial licenses for small banks include the likes of Aditya Birla Group, Bharti Airtel and Vodafone.
As far as pricing policies are concerned and practices are concerned, it's quite possible that new entrants, especially when they start from a smaller base, there could be some disruptive pricing.
But if the new kids on the block are successful, they could be joined by more. The central bank is monitoring the performance of these new entities and will decide offering new licenses on tap to companies that meet requirements going forward.
But while the incumbents were digesting the fact that they would soon be sharing their territory, a shock in the form of the Bank of Baroda Forex scam sent many of them scrambling for cover and woke up the sector and the government to harsh reality.
The scam came to light when Bank of Baroda flagged unusual remittances from its Ashok Vihar branch in the national capital. Government agencies investigating the case found that there had been illegal remittances worth around 61,000 crore rupees to Hong Kong. So far, 9 banks including Bank of Baroda, ICICI Bank, Kotak Mahindra Bank, Axis Bank and HDFC Bank have been named in the scam.
The Finance Ministry ordered a forensic probe into the alleged irregularities. The government swung into action and after initial investigation assured that this was not indicative of systemic failure. The real extent of the damage, however, will only be known next year. In the meanwhile, the banking sector will step into the new year better prepared to embrace the new, more evolved landscape. In Mumbai, Alexander Mathew.